for real. Like
I'm cooked,
one
man.
trade.
He's
Cooked
cooking.
so many things today.
Hey guys, we're recording now, so here's our Q&A. So, Candlelight Session. Been a while since we did one of these. Anyways, let me know what questions you have, anything you want to discuss, especially the new guys in the room. Probably have a few questions, but I've been working on a few things. I can
I ask
share.
the first question?
Yeah, of course. Go ahead. Go ahead.
Can we possibly use level 2 on SPY? Well, because what I can see on the book map is actually a bunch of random orders. For instance, right now I'm seeing 4,000 orders sitting like every $0.50 above and below, and these are all basically there's no pattern in it, there's no imbalance in it, and these could be easily on SPY could be hedging. So that's what I'm thinking. But you know, if you have a different idea.
Yeah, I haven't been able to effectively use it on the SPY for exactly that same reason. But if you filter it out so it only shows some massive major orders, perhaps you'll be able to find some sort of pattern or some sort of highlighted price that you could target. I'm pretty sure there's a way to do it. If you look on DOS on the level 2, you can filter out so it only shows massive orders. And you might be able to find something effective. I haven't done it. I haven't tried it. I'm not a big user of the level 2 anymore, so I haven't tried. But give it a try. Filter out and see what works.
Yeah, the only thing that I've seen it kind of useful is that whenever we have like a trend in the SPY, when we look at the open interest and when we look at the volume of the traded options, sometimes we see at some strike prices the volume of option trade being traded and the open interest, both of them are exceptionally high, and that actually possibly indicates one level that we can take profit.
Yeah, I've heard of a lot of theories like that. A lot of people do that. They look at basically the structure of the options market, and then use that to take trades on the underlying. So it's the reverse of what I do. And I think it's fine. I just find it to be a lot of work, a lot more work than simply looking at candlesticks. That's why I don't bother.
Yeah, okay.
So, but again, there's nothing wrong with it as long as you can have confidence in it. Again, this is not stuff that I do just because I find it unnecessarily complex.
Yeah.
But nothing wrong with it. Again, you're not the first person to go through this. A lot of people do it, so that should give you confidence already. And should be all right.
Cool, thank you.
Mm-hmm. Sure. What do we got here in the chat? Raf made money scalping NVIDIA. Cool. Very good. NVIDIA moved. All right. Anyone else got anything you want to discuss? I'm going to share a screen here.
I have plenty of other questions if anyone, if no one has.
No, go ahead. You guys, you can type it in or just use the mic, whatever you like. Yeah, go ahead now.
Yeah, all right. So if I can use the mic, it's easier perhaps.
Yeah.
So if my setup is based on 15 minutes and my entry is based on 1 minute, as a rule of thumb, is my stop based on 1 minute or 15 minutes? Or it can be either of them based on different situations.
See, for day trading, I suggest go with the small time frame for your entry. By that I mean your stop will be based on the small time frame, on the 1 minute. And the reason for it is because your day trading will be, you got to get out within the day, within 30 minutes perhaps, or within 5 minutes perhaps, whatever it is. And so you want to get really good risk to reward. You don't have a lot of time to get that risk to reward. So that's why you want to use a tight time frame, get a tight entry, maybe take 2 or 3 stop outs before you get 1 5-hour or 10-hour trade to work. And that's day trading. So what I suggest with bigger time frames, and the way I like to do it, is fractal patterns, which is nothing more than on a big picture, you have a specific setup at a specific level going in a specific direction. Once you've confirmed that on the bigger picture for you, that's the 15, then go to the small picture, the 1 minute, and look for exactly the same thing on the 1 minute, and then take your entry on the 1 minute, so that you have a specific directional setup at that same area on the 1 minute, then you take your entry. And that's all the fractal pattern is. It's What you see on the big picture, you see the same thing on the small picture, and you take it. That's it. That's the whole thing. Nothing more than that. But you do have to make sure it's well defined. You don't want any gray areas. As much as possible, try and make it black and white. That makes it easier, much easier. So define the patterns, define what it is. If you're looking at breakouts or reversals or continuations, whatever it is.
Thank you.
Yeah. And look at the webinars on fractal patterns. I must have done. Most of my webinars have been on fractal patterns, especially the ones from 2 and 3 years ago.
Yeah, I've watched them actually quite a few times.
Okay, there you go. So you got the details. Nothing's changed. Nothing's really changed. I still firmly trade fractal patterns. I just have a few different things where I go with naked charts and different kinds of levels, but it's still just fractal patterns. Nothing has really changed on the bigger picture.
So thank you.
Yeah. And just a moment, guys. I'll be right back. All right. So here we have yesterday's price action on the SPY on the 30-minute. You can see the big drop. And what's interesting is it did give you a couple of different setups for the drop. None of them that I actively trade, but they're all there. And we can go through some of these details. So if you look at it from just the pre-market activity, it's been bullish. Then it put in this candle here, this 11:30 30-minute candle. Anyone knows what this one is when it's happening during an uptrend?
Hanging man.
Hanging man. There you go. Thanks, Tarek. And then we got this red one. What's that? Anyone know what this one is? 12 o'clock. Yeah, indecision. Yeah. And then we have this one here at 12:30. What's this? Anyone know?
It's a candle.
Yeah, it's a candle.
With a long wick to the top, failed to break out. So basically, we are starting the bear move.
Yeah, more bearish than bullish. Not ideal reverse hammer, but it's more of a reverse hammer than it is indecision. So what's interesting here is you have these three in a row, which is interesting. There are strategies that I've used many times in the past, and there's books and books written about this stuff, where actually any one of these candles is a setup on its own. So in an uptrend, when you get a hanging man, that's a massive indication that the uptrend is over. And then what you want is, where is the beginning of the downtrend? Well, there's a few different ways to think about it, but the simple one is the bottom of the hanging man is right there. Once it drops the bottom of that hanging man, that's when you want to take your entry. So below this level is your entry for that short, and you're in this thing short. So that's one. Now another one is indecision. You have this indecision candle right here, and the bottom of the indecision candle is right here. Now, you don't want to have indecision during chop. Like here, it's just chop. You can't tell. But during a trend, when it's in a direction, then you have indecision. What it's telling you is the trend is over. Now, you don't know if it's going to continue up or down or sideways. But an indication is, well, a simple thing is, when you have indecision, you want a decision to be made. And so simple way the decision is made is after the indecision candle, the new low, which would be here. So once it makes a new low off that candle, there's your entry. Look, you even get a retest on the 30-minute chart and straight down. So just on its own, that indecision is telling you something. And then you have this almost reverse hammer, and you all know this one. I usually trade it, but this is not a good enough hammer. The new low would be the entry. But now what's interesting is you have all three together. Very interesting. If I was trading this stuff yesterday, like I used to a couple of years ago, the entry would have been right about here, just around 1 o'clock. The short here with a stop right above it, and you're just going on to this. So you can see the setup. It took an hour and a half to complete, but realistically, the setup started here at this 11:30 candle, and you end in, if you're the most conservative setup out of these, is your entry is later on. It's in this area around 1:30 or so for that short. So again, candlestick setups, right? There's not a lot going on here, but simple candlestick setups. I think the key point that everyone seems to get messed up when they're looking at these candles is people just look at the candle, just zoom in on the one candle. But what's important is the context. You need context with candles. And the context here is an uptrend. You have nothing more than an uptrend. And even if you look at this here, this big indecision candle, you can't say that this candle happened during an uptrend. This hardly had 3 candles going up. It's still in this consolidation zone. It's still messy. But now once it's up here, then you can look back in time and you can see for the last couple of hours, it's been in a good uptrend. And now you're starting to have this uptrend failing, and you're getting all these candles in a row, giving you quite a massive amount of confidence that if it makes a new low, you can take that entry and put a stop right above it. And even if you stop out once or twice, you get a good opportunity to go. I mean, these are powerful setups. These are basically 3, I'll put it together. You have something like 8 or 9 30-minute candles in a row giving you a setup for this massive drop yesterday, right? And it's not too complicated. You just got to make sure you wait for the confirmation. I think that's another really key point, confirmation that it's going to go down. And the confirmation is just a new low. And you're working with 30-minute candles, so it takes 30 minutes. Sometimes it takes hours to get confirmation. If you're basing it off of this hanging man candle right here, your confirmation is that it drops the low of that hanging man candle, which happened, 2 hours later. So you get the setup, and then 2 hours later, you get the entry. So, nothing wrong with trading like that. You still have plenty of time in the day to make the trade. Look at that. It would have been a huge trade going down. So these are things to look at. You got to look at it in context again. It has to be in the uptrend and then give you all these indications. Like, for example, today we were talking about these hammers earlier in the day, but the context kept me out of getting involved in this long position here because there's no room to the left. It's not the way I like to see the hammer. It's just chop. Here's the bottom, here's the top, and these are just hammers in the middle. It's not a hammer that's pushing out of its comfort zone, room to the left, and all that stuff we like to see. So really what I'm talking about is context of candlesticks. And really you stay out of a lot of crappy situations. Really, that is very powerful. So, I only trade maybe 4 or 5 specific candlestick patterns that you guys have seen me trade this year. But there's 100 others. And I'm just showing you yesterday. There were 3 right here. 3 specific setups, all would have led you to pretty much the same entry. And you're getting this short, right? So I'm telling you guys, the market's an absolute gold mine. There's money to be made everywhere, even without any levels. Just look at price action and go. That's why I'm not too fussed about levels. They come, they go, whatever. Price action is king, always. Always, always, always. Look at this one. Massive move up, and then it dropped, then went back up, made a lower high, and this is your first bearish candle off the lower high, confirming that lower high, and it's a genuinely bearish candle. This one at 130. The entry is the new low below the candle. That's your short, and you're in this thing. You might stop out once, re-enter, and off you go. You have this double top. It's a decent looking double top. It's not that bad. So you see, you get all this interesting stuff. But again, context. It's only a double top because it's a top of a move. It's defining the top of the move, which sets up for a reversal. You would have targeted the support down here, which you would have got before the close. You would have had your target. So there's so many ways to trade without overcomplicating it. So anytime you guys ask me about all this complex stuff, I'm like, what? Talk to each other about it. Don't talk to me. I don't want to know about it. I don't care anymore. I just don't care. Look at that. Not a perfect setup on the SPY, and it's dropping. Sure enough, this is just going right back into the choppy zone that has been in before the market opened. Forget about that.
I'm hearing Mark crying. Is that right?
She crying? Oh man.
Sorry.
No, it's all good, man. Yeah, stop out half hour.
That's good. That's good.
Good. Yeah, this is all chop, man. Even yesterday, other than that reversal pattern on a very localized kind of pattern, kind of perspective, I don't see anything. I just don't see any setup.
On yesterday's setup, when you're saying it's a double top, before it forms, before it confirms the double top, we can't really enter, can we? So we have to wait for the first red, and then the second red actually confirms it, isn't it? Yeah.
Well, what you have to understand, what completes the double top, and then what's your entry confirmation. There's 2 different things. Yeah. So what completes the double top is when this candle closes. So this closes at 2 p.m. This one right here, and what confirms it is that it's a fully bearish candle. It's the low and the close are pretty much in the same place. And you can see then that the second top is higher than the second top is lower than the first. And there's a nice little arch in between, little gap in between. There's room to the left where it formed the double top. So that's the setup complete. Then the entry confirmation, I would put a level right at the low of that candle, right about there, is when it drops below there on a 1 minute chart. You're looking at basically a breakout, and you enter the short there. Stop is right above that level. You would have stopped out on the next candle. You re-enter that, and you're in there. And it doesn't look like a lot, but with a good entry, that's definitely more than 5R for sure. With good entries, just wait for your good entries.
Yeah, I entered actually twice, and both of them failed. I didn't go with the third one yesterday.
Okay.
Oh.
Well, you got to, again, have very well-defined setups and then well-defined confirmations. What is it that you look for in a setup? What is it that you look for in a confirmation of the setup in order to put the risk on? That's the way I like to think about these things. And again, that keeps me out of a lot of trades. Like, I see setups all the time, but without confirmation, I won't even take it. Let the setup go. So, you need all that stuff. Then you get a better win rate. And what's actually very powerful is when you get all that coming together and then you take the trade, then you even have the confidence to hold it for the full 10 hours or however far your target is. You're not too fussed about taking partials. Now, that's where the big money is made. That's why I keep telling you, I'm really not interested in scalping. It's only 2R, 3R if you're lucky, and it's just not worth it. So when you have the 10R opportunities, that's great. So what makes the 10R opportunities is, well, the biggest problem is people don't know how to hold it for that long. So how do you hold it for that long? Then it's a matter of psychology. Psychology is, well, you need confidence to hold it that long. So where'd you get the confidence from? Well, I get it from perfect setups. Then I just let it sit. So you guys have seen me do this all year, especially this year when I moved away from all the scalping stuff and since the beginning of this year. And then trading got bigger, much, much, much bigger. In the end, it comes down to psychology. It always does. Always.
Yeah, I was reading this, and the quote said, confidence and fear are both something. They both require to believe in something that hasn't happened yet. And at some point, you got to drop one of them and go with the other one. Yeah, that was quite deep because I'm struggling with that. I know where the price action. I'm guessing where the price action is going and where my target is, but I'm starting taking partials in the way which doesn't make sense. My trades should be 9-10R and it's 4R because of the partials. Even though I'm like, oh yeah, that's gonna go here, and it's just yeah.
That's a very good point. Fear and confidence. It's amazing. Fear is a real driver. It's a good thing. You don't fight it. You have to embrace it and learn to respond well to it in a way that gives confidence. It's interesting. It's all hardwired into our existence. So you don't fight it. You can't fight your own nature. Never do that. That's a good point. Fear and confidence in the same sentence. I like that. Think of it that way. And you use there's various mechanisms to get confidence from. And you put those mechanisms in place, and then, well, you're standing there with your open position and you're full of fear, but then you have that confidence as well to go through with it. So that's all trading. Now that's the real trading stuff. Now, setups, patterns, levels, whatever, they come and go. But your ability to execute through all your fear and confidence and all, that's the heavy stuff. That'll determine whether you're in this business for a long time or not. Very powerful. Look at this. You see on the 30-minute chart, looks like the SPY broke out and doing a retest, but there's no way. Even if you see it on a 30-minute chart as a perfect setup, show me where you'd enter on this 1 minute chart. Where?
I entered right there.
You did? Okay.
I entered right there. What candle I'm in? I'm in a 11-17 candle. My stop loss at break even now, so I'm
okay. Good.
Very small risk, very tight risk. Like literally the bottom of the big candle. That was my
nice.
Yeah.
Nice. Good entry. Good entry. Yeah, man. You're reading the momentum going through with it. Nice. Yeah, there's a bounce there. Yeah, de-risk it quick. That's a good point. I don't like to get into these because I'm trying to hold for this thing. Go from this level all the way up to the next, and it's with these kinds of setups I can't do. I don't have the confidence that it's going to go all the way.
Yeah, this is I had taken the same trade on a Google a few days ago, and it was literally kind of same setup where I don't see the buyers at the VWAP, but then dip below and grab the liquidity. Yeah, that's something I'm testing right now, but let's see. So
Cool.
yeah, that's why we didn't put much on risk. So
All
comes
right.
there, break me even, I'm good.
Good. Yes. Moving to break even as quick as you can, then you're good.
Yeah.
It's always something I'm looking at as well. Very good, man.
Thank you.
Good, good. Cool. What else we got, guys? What else you want to talk about? Let's see. You can even trade these things without the pre-market activity. I was looking at that for a while as well, which is not complicated. On the SPY, it's really not. You go into TradingView and you can look at 30-minute candlestick charts and do it. I did trade like that for a while in 2022, a couple of months, I think. I was looking at 60-minute charts without the pre-market, just looking at TradingView and then punching orders in on my phone. And it was okay. Not too difficult. Again, very mellow. And what I like is that you really detach. You're not looking at the 1-minute price action. You're waiting for a specific 30-minute setup. You might get it once or twice in a week, and you just put it on and then you leave it alone. And either it hits your target or it stops you out. Again, the beauty is you're not sitting there on something like DOS Trader here and totally zoomed into it all the time. And nothing wrong with trading like that. I think that's very healthy. I'm trying to trade more and more like that. It's just difficult with the liquidity issues to do that, but that's very effective though.
You were saying that you're gonna start, doing it on an options chart price. Like, are you still doing it, or are you gonna?
I'm exploring it. Yes,
Yeah.
I've explored it before. Back in I think May and June, I was looking at it and I couldn't figure it out. Not reliably, at least. And more recently, in the last couple of weeks, I've been looking at it on a 1-minute chart. Still not reliable enough to take trades on it.
Yeah.
I mean, it's wild, but it can be done. Let's take a look at today's example. Let's say 643 makes sense. You're out of the money. All right, so this first 30-minute candle close, and let's say you're thinking it's all bullish from there, whatever your 30-minute setup is. So from 10 a.m. onwards, let's see if you can find a setup on this chart. So 10 a.m., where's 10 a.m.? Right there, right about here. From this point onwards, where's the setup? You have chop, 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 chop. It goes up from here, it comes down. And you're only thinking long, so you're only going long. You're never shorting these options. At what point is it no longer a long? Also, you got to look at that. I'm beginning to see support down in this area. Whoops. Whoa, what happened there? Okay, I clicked way back on the chart. This is today, right? So support is down here approximately. And then you're thinking beyond 10 o'clock, how do you get involved in a long from here? I don't see it. This is interesting. This candle is a very serious bullish engulfing, exactly how you like to see it. The entry is a new 1-minute high over there. It stops below it. And you're in this. It doesn't really go very far. It goes 1 hour before it crashes back on you. So not worth it. And after that, nothing. So, I mean, that's just today's example. And yesterday, what I was doing, watching the live market, I was watching this chart, the options chart, going out of the money, 0 DTE. And I tell you, man, watching these live options charts are insane. They're really crazy. They do move differently than the regular 1-minute chart, than the SPY chart. And much more complicated to pick up patterns on this chart. I've tried it. I'm not even sure it's worth my effort to continue exploring this idea.
Yeah, the rate of burn was insane because, like, I was earlier today, I tried to short SPY from the top where the wherever they got, like where the top is, and all the pullback, all the drop, and that little bounce got me at a break even. Like price never went test me in equity, and that little, like, literally right there, I was at the break even, and I was like, okay, it's not worth it.
It's not worth it. Yeah, going 0 DTE and out of the money is the most insane thing. In the only way to really be consistent with it is to have very, very good timing on your trades, like precision, real precision. Like you're going long down here, for example, and never test you. That would be down here. And it still would have spooked you out a couple minutes later, but at least it never really tested your break even.
Yeah,
And you
even
still have
that one, like the price dropped below here, and the equity never even came close to it.
Yeah, exactly. So, I mean, this is out of the money stuff. So there's a time to go out of the money, which is when you're planning a momentum trade, when you're identifying that. Otherwise, if you know it's going to be a slow trade, it's going to take a while, then in the money makes more sense. But still, you're 0 DTE, which still means you better work in your favor quickly. Otherwise, you're going to struggle with it. So I've been trying to get around those sorts of problems by looking at patterns on the options charts, but man, it's not reliable enough, not at least for my eyes.
The time decay is just killing all the strategies, all the analysis that you have. You just set a line, you said this is a line that you want to choose half an hour later because of the, I don't know, delta, gamma, or whatever, a massive move, everything just ruined. All the strategies just gone.
It's absolutely, time decay is just a disaster. So fair enough. It's impossible. That's why I was thinking maybe reversals are what you can look at, because it's all basically going down. Then you're looking at reversals, like big double bottom, or something. But I can't identify it. It's too complicated. Maybe I'm thinking too hard, trying too hard, and it's actually violating one of my rules. My rule is if it takes more than 5 seconds to figure out, it's not worth figuring out. Just leave it, move it. I kind of do that for most things in life, and that keeps me in a good place.
Avi, can you take a look at SPY and then put it, the yesterday low is at 642.35. Just put a level there. Let's just put it 35. Roughly, that is, I'm not trying to come up with levels. I'm just trying to see. So I see that it just keeps bouncing and then coming down, and then but the highs are low. So I see that there is a bullish pattern. So, and if there's the room to the left, if it has a breakout and the retest, because it broke a couple of minutes ago, and do you think it's a short or no?
I don't think so. I mean, you're getting these lower highs.
Yes.
You have to understand this is firm support. The lows of the day are always firm support. It turned into firm resistance, and now it broke through it. Now it's turning into support again at the same time with the lower highs. So you're getting mixed signals, right? Mixed signals, definitely don't touch it. I won't touch it. I'm not.
I'm saying if it broke again and retest. Now, if it broke, it went below 642.30.
Oh, okay.
And it comes back and retests. That's what I'm saying.
Yeah, that's valid. But again, one thing I like to see is the quality of the consolidation before the breakout. So the lower highs make sense. It's not exactly a flat bottom like I like to see it. It's almost there. Yeah, it makes sense. It's almost there. But then you're zooming out a little bit, just even a little bit. And you can see it's just kind of in a zone where it doesn't really want to do much. After the big move, you can see that it's just got stuck here. Then yesterday it got stuck here. Then today it's stuck here. It might just chop around this whole level. That's what it's done so far today. And you're just going into these previous buyers that have been here all day so far. So, I mean, you might take a short here, and then this is as far as you go. What is this going to be? 2R maybe? 3R? Yeah, is it worth it?
It's not worth
So
it.
it's an imperfect setup and then an imperfect RVR. There's too much doubt on the table to put risk on, in my eyes.
Okay.
I'd rather wait. If you had a really good flat bottom and these lower highs with it, I'd be much more willing to say, all right, it's likely to burst through all the support down here and go down. We're not getting any of that. It's just not there. So leave it alone. You get perfect setups all the time. You don't need to trade days like yesterday and today. Yesterday would have been okay with that reversal, but that's about it.
What do you think about PLTR?
PLTR, yeah, sure. Just a minute. I'll catch up real quick on the chat. Here looks like there's a few questions here. Yeah, no worries. I'll put a PLTR here. What are you looking at?
On
Fab, you're asking about change of character. Explain, like in kindergarten. Can stay all day in a losing trade, but I'm nervous on your winning trades. Get out too early. Explain the change in character. And Dan, you got a couple of videos here. Okay. Best loser wins. Yeah, very good. Change in character, staying in a losing trade and getting out on a winning trade. I think everyone's done that. Everyone still does that from time to time. I still have to catch myself from doing that. You stay in a losing trade mainly because you're so terrified of losing that you stop trading and you go into the hope zone. You start hoping it'll go back in your favor, and then you get out at break even. But never does, and you never stop out, and you've blown up an account. So that's a psychology. It's just the fear of realizing a loss. It's on paper, as in unrealized losses, until you hit the button and exit. And so that's a real issue. A lot of traders have to go through that. And I think in the learning curve, you have to go through that before you really learn how to mature into a trader. On the other side, the winning trades, I think that becomes even more complex because you're getting into an excellent position. It's beginning to work. And because you've had bad experiences of losing, the moment it goes in your favor, you're just so eager to see realized wins that you cut it short and you get out with half an R or 1 R, which doesn't make up for the 3 losses that you had and you held beyond your loss, right? It doesn't make up at all. So it doesn't add up profit-wise. But it's a psychology thing. Again, it's all psychology. It all basically boils down to fear and how we react to it, how we're conditioned to react to it. Fear and scarcity. That comes from pop culture. We've talked about that 1,000 times. So once we understand these sorts of things and basically start becoming rebellious. So rebellious means you got to unlearn everything you've been taught by schools and education and the rat race, all that stuff about scarcity and fear. And basically got to become arrogant a little bit and just say, fuck this. I'm going to do what's right. I'm going to stop out. I'm going to hold the winner until it gets to a target. That's it. Fuck it. You got to become rebellious and arrogant. To begin with, you need that courage to do that a couple of times. Then you have your first couple of big wins, 5R, 10R, and you realize, holy crap, it actually works. Then you can start doing it consistently. So it's all psychology. It's all psychology. You just got to do it once or twice. You got to taste the wins once or twice. After you stop out at 1R 3 times within a day, 1R stop, 1R stop, 1R stop, you make sure you take your stops, and then you hit a 10R. And then you're like, holy crap, you know? And you only hit that 10R by putting it on and don't touch it till it gets to your target 30 minutes later. Then you've really won. Now you know how to trade. And then you don't take a setup until it comes. And sometimes you've seen me now, it's been a couple of months I haven't traded because there's no setup. So, you know, that's when you're really trading. So that's the psychology stuff. I hope that helps. All right. Nasser, you were saying PLTR?
Yeah, PLTR on 30 minutes candles.
Sure. Okay. What do you got?
I can see an invasion right on top of the previous 2 candles at around 161.
Mm-hmm.
That shows a resistance over there.
All right. So it put in this candle. Would you call this a very good perfect reverse hammer?
It's not. I mean, it's not perfect, but I mean, combined with the next one, it doesn't look too bad.
All right. Now, when you're combining it with the next one, let's just isolate this next one. Is this a perfect reverse hammer?
If you isolate it, yeah, I think so, isn't it?
Yeah, pretty much. Yeah, it's right there. But there's no room to the left. Look at it. It was just there a minute ago.
Yes, room to the left. Yeah,
it's not there. So I don't trust this setup. I wouldn't trust it at all. It keeps pushing up, and then you want to put risk going down. Yes, it pushes down as well, but now you have it twice pushing up and down. If you like, you can look at tweezer tops, which I don't trust either. That's another setup where you have very firm wicks in basically the same place right here. It's not exactly in the same place. They're a few pennies off. That's a tweezer top after a firm move up. I don't trade that for a good reason. It's good for momentum trading, but not for the way I like to trade, where you really take a reversal and it goes all the way. So no, there's a good reason why this is not a setup for me. Now, if this reverse hammer had a longer wick and it popped out of the previous top, perhaps 162.50 or above, and it closed with this body like this, then I'd say, all right, you have a reversal opportunity, and then you would think about it.
Oh.
But not like this. Not the way I trade. I don't like this tweezer top stuff. It's for momentum trading. It's not
Thank
for
you.
what I like to do. Yep. Cool. What do we have here? SPY bouncing off of previous day's low. There you go. Was that you, Asgar? You were asking about this? It's bouncing, but I mean, there's no.
Sorry, I was mute.
No worries. Yeah, still I don't see a 30-minute setup. It's just bouncing. It's not doing it. I don't see a 1-minute setup either. Gosh, this thing's got teeth everywhere.
It was a big drop on Tesla with the volume a couple minutes ago. I don't know what happened there.
Tesla dropped with volume. What's volume? Never heard
It's
of
the
it.
little bar at the bottom.
Can it be at the top?
I don't know what was happening with that.
It looks like a tweet or something. Somebody launched a rocket again. Yeah, let it be. The pattern's broken now, if there was one. All right. What else we got in here? Sach, you're looking at Google.
He loves Google.
Man, all day on Google. Huh?
Right? He loves it, man. I don't know how much he want out of it.
So, hey, Sach, are those Avinacci levels still working for you on TradingView? You had created an indicator and all that? Well, let us know. Google, what do we have? We have been in a downtrend. Do I see a reversal? No, I don't. I just see a downtrend. I don't see a continuation pattern. I don't see it. Those are working, Sach. Using the TradingView levels. Okay, cool. There you go, guys. Sach has got an indicator he developed on TradingView for the 8 a.m. candle that's working well. Consistent. So there you go. He solved the problem. Google, let's see. This is pre-market support. It dropped, and here's your retest and a continued drop. And if you were in that drop, you'd look for where was support. Where's the next level of support? So this area looks interesting. Now, you want consistency. You want, well, there's obvious. Right there. That's very obvious. Look at that. There and there. Didn't get that far. Before that, this one's obvious. Actually, be a bit conservative. Put it on that free market. There you go. This makes sense. So it overshot that just a little bit. So about 206 would have been support. And you're identifying buyers there and there. So two at levels where I'm identifying buyers. So far, they seem to be at 206. So at the open, yeah, very hard to catch that right in the first minute. Your target. This is an interesting one. Look at this. You have this downtrend, then you have a double bottom, and the thing's going up. It's a good looking double bottom. You have the first one, the second one's higher. You have some space in it, a bit of an arch. And where the confirmation for me is when this candle closes, 11:11, because this is the first genuinely bullish candle after the double bottom is closed. The entry is a new 1 minute high. So basically that happened on the next minute. The stop is below the bottom, right about there. And you're going up. And then you're looking at targets. I mean, you have the big ones, but you're looking at a reversal. And really, you just want to look at where it came from. This is an obvious target. You have areas of resistance. You have there. Well, that happened after the fact. You have there. There you go. That's interesting. I would have probably de-risked over here to begin with. Then you have here. Then you have this area. Where do we have the wicks consistently? Oh, look at that. Right there. That's a big one. From here, this seller just pushed it, right? So you have 3 target zones. And you can recycle there as well. So there you go. That's interesting. Google. Yeah. But again, just a 1 minute reversal. On a 30-minute, that's where I like to look for setups. I don't see any reversal setup. It's just chop. There you go. That is a decent looking one, double bottom. I haven't seen one in a while.
Hi, Avi. Welcome back.
Thank you, sir. How you doing?
Good. You okay?
I'm all right. I'm all
Feeling-
right. Just a
you
little
feeling
bored.
strange being here, or you feeling at home?
Yeah.
or-
Well, I'm happy you're here. At least I'm doing something with my life rather than just being lazy. But I am tremendously bored, man. This market just doesn't like me.
I
at the moment.
know. I know. There was some good action when you were on leave. So, yeah, there was some good action. But yeah, for scalpers, there was some really good action.
Scalpers, yeah. I gotta figure out the levels if I want to keep using them. They've changed. The 8 a.m. stuff has changed.
Yeah.
So just redefine a few things. Not a lot to change, honestly, but yeah, all good. But yeah, that's the thing. You take a bit of a break from the market, then you have to find your rhythm again.
Switch back in. Yeah.
Yeah, that's more important right now for me. Just get my head back in that rhythm where I can observe these candlesticks in real time and put on risk and flow with it.
Hmm.
And that's a good thing. When you have rhythm, don't disrupt it.
Yeah, the flow. Yeah, you're right. You're right. You're right. Yes, I mean, you're absolutely right. I think it's a high performance game, right? I mean, high performers, it takes a while for them to take off, get to the flow state. Once you land, then you do the same thing again.
Oh man, yeah, enough taken off.
You're on the strip right now, trying to taxi and get to the
Oh,
takeoff zone.
it's kind of painful, actually. But it's all good. It's good to be back here. It's good to see you guys have been very active, and I'm happy to be back. Just being in the room is helping getting back in the zone. Familiar
See, there
environment.
are two aspects. There are two aspects to being with you, right? So one is there's a lot of learning. You teach us, learn us, but then the adrenaline rush when we see the 4,000 contracts. A lot of people are missing that. Right, Govinder?
4,000 guys. You guys get the rush from 94.
It's like watching a beautiful babe on the movie, right? Where is the beautiful babe, man? The movie. Come on, bring the chick.
Oh my God.
So man, no, I'm not no Katrina Kaif or nothing. Okay, you keep that away.
You need to bring a Katrina Kaif.
She is my favorite, man. She is my favorite.
She's your favorite.
Oh, hell.
Yeah, I'm obsessed with her, but yeah, that's another story. Good to have you back, buddy. Good to have you back.
Thanks. Yeah, it's good to be back. Definitely good to be back.
I mean, we have been chilling with Gurinder and Mark and Shan and all of us. We have been howling together on some trading days, which is good.
Good. Yeah, keep trading, keep staying in the zone and keep evolving. That's the key.
Yeah.
You got to keep evolving. And that's the thing about rhythm. That's the thing about flow, really. Also, one thing is also when you're in the rhythm, that's good. But then the problem with flow and being in the zone is you get bored. You really got to up the challenge. Otherwise, you get bored. I remember I got into burnout earlier this year. I think it was March or April before we did Vancouver and Whistler. I was just burnt out. I'm like, man, I'm almost bored with it. It's like every day the same setup. Yes, the profits are good, but this, then it's psychologically, if the challenge doesn't increase, then I fall out of the zone, because as you keep repeating the same thing over and over again, your skill increases. Then the challenge needs to increase to match that skill. You're still fully engaged. Otherwise, you're getting bored, and then different things pop up, different problems pop up. And then you have burnout and such things. So I remember I've had that, I think, twice this year.
I wish I had that problem.
No.
So bored. I just made 200,000. So bored, man.
After a couple of millions, it's like, oh fuck,
Yeah.
I'm bored, man. What is this shit?
Now what do I do?
Why I keep on making 200 grand every
Yeah.
trade? What the heck is
Go
going
just
on?
buy a Lambo for lunch, but yeah, I'm bored though.
This shit is too stupid. I'm not doing this shit anymore.
No, but then that's fun, because then you get bored, so you take a break, you come back, then you realize you're not in the zone anymore. You're out of them now. Just looking at a candlestick is terrifying. Like, oh shit, how can I take 100 contracts? Like, whoa, just slow down. It's all the way back to the other side. It's so funny how the human psyche works, and being in the zone and flow. It's amazing.
I know.
So this year's been a roller coaster with that stuff. Absolute roller coaster with trading.
No, you shocked all of us, man. You shocked yourself and you shocked all of us as well with the way you suddenly took off, right?
Yeah, it worked. Everything worked so far, and let's see
It's
now.
sudden to you. It's not sudden to him. He put in work.
Huh? It couldn't work. Oh, sorry.
I said it's certain to everybody who's watching from outside. It's not
Yeah.
certain to you when you're putting in work. You know what I mean? Like It's,
Yeah.
Yeah. No, you put in the work, and ideally you get the results. If not, you keep working, keep evolving, keep evolving, keep evolving. And even when you get results, you still keep evolving. Same thing. There's plenty more out there in the market. Plenty more. I mean, there are days. I mean, we've seen, like, look at this big day a couple days ago. That's $1 million right there. We had another one right there as well. You know, in the last week. Here's a big drop too. How do you catch this and stay in it and keep reading it? That you should stay in it because the buyers are not there until the end of the day. You know, these are $1 million days, each of them. I'm seeing 3 or maybe 4 of them just on this chart. How do you catch that stuff? That's these are the things to think about. And you don't need to put on 4,000 contracts. If you're holding it this long, even 500 contracts will get you multiple 6 figures.
Yeah.
But you gotta be able to identify these things. So that's what I'm trying to think about. And now, actually, here's a good one. These Fibonacci levels aren't working, and personally, I'm not too bothered about it. Some of you guys are trying to get them to work. That's great. Let me know if you need help or anything. But what I'm looking at is just this chart, just candlesticks. If you look, we were talking about this double top that occurred here a couple days ago. That's pretty cool. You can take that double top, you take your profits, you can identify the profit zone right there. And you can even take off 90% of your position and leave the rest of it on because it's a big 30-minute setup. And look at this. 2 more days on, you're still in that downtrend. Where is the support? Where can you identify support? Maybe, where? Down here. So actually today at the open, you would have taken those profits. Yesterday, we just left it alone, the whole thing. Or maybe added in when you had this reversal set up yesterday. And that's something. But for this is not 0 DT. You probably take 0 DT, get out in the day, but at the same time, take some longer dated contracts, perhaps 1 month out, so you don't deal with time decay too much. And then you're dealing with a massive double top here. This is pretty cool. How about this one here? Look at this. You have this big consolidation, and then this big reverse hammer. You take that short, and this is massively going down, all the way down. You take off 95% there, or take off that 0 DT position, but the other position you open at the same time, which is a month out, you're still holding on to it until you see some sort of reversal pattern down there somewhere. Or you just look to the left and you identify a target. Maybe down here is where I see support right there. You can put a line there. So it's on this day when it actually drops heavily, you start taking it off. And then you have other setups where this looks like I remember this. This is a big double bottom down here without levels. I'm doing all this without levels. You had this thing dropped and then a big double bottom, right? Maybe you would have entered here, you would have stopped out. Then you can re-enter. If you're looking at that bottom and that's the second one, you can re-enter. Within the day, you're out of your 0 DTE position, but you're into all this stuff. And then you have a double top. That's when you take that position off, that one that you started down there. Then you put on the put position, and you're in this already. I mean, all this together is a few $1 million.
Gurinder, we are about to lose our lead trader, man. This guy is going into the swing zone. It's like it's like the prophetic thing, right? He's getting the nirvana now. He's the Buddha who found the nirvana. All the fuckers behind him, the disciples are. We are still trying to figure out what nirvana is.
Yeah.
I think he's thinking about millions and millions of dollars, right?
Yeah.
And he's not going to get those millions in a day trading. It's a guarantee. It's very hard to get that, right?
Yeah.
For that, he needs to get out of that zone. I think, Avi, you are flying, man.
Yeah, I don't know. I'm just looking at this chart the last couple of weeks.
I know.
It's just there.
There are a lot of there are a lot of $1 million traders. I can name few of them who just don't take trades if they are not millions. But they're not day traders, right? They're slightly longer term traders, right? Within a week or week to 2 weeks max, or sometimes couple of days, right? 2 to 3 days. But they do exactly what you're saying they do, right? Because I think 6 figure has lost his charm for you, right? It's the girl you already dated and took out and blah blah blah, and you're now looking at the more mature woman, who is more stable. And
Oh my God.
Come on, it's just an analogy. I mean, like
Psychology. Oh my God! You're the moral values officer in this group. You're talking about everything goes to
being with you guys, I'm already losing all of it.
Atif is always equating trading to tits and ass for some reason. I don't know what-
Honestly, I did not mean that. I mean in a good sense, in a way that
yeah, I get
he's
it.
maturing up as a trader, right? I've been listening to. He's thinking about $1 million trade. That's exactly what I think. That's what you're thinking, right, Avi?
Yeah,
You're-
precisely.
Yeah, there you go.
Yeah, the majority of there's so much money to be made.
Yeah.
I mean, just watching the candlesticks move, once I've removed these Avinacci levels, look at these things. They're just moving everywhere. I haven't touched it because the levels are in my way. At this point, those levels have gotten in my way. They were great the first 6 months of the year. Now, I don't know. They're not there. And I think it's an opportunity. It's freed me up from those levels. And all I've got left is a 30-minute candlestick chart. And just looking at it, it's tremendous, And here's the thing. The fact of the matter is, across the history of the stock market, the majority of the money that's been made has been made overnight. All these gap ups and down and everything, all of that. So if you can find a way to take advantage of that, that's pretty cool. Now, swing trading, in my understanding, takes a lot more than just candlestick patterns. I mean, all I'm doing is looking at candlestick patterns. And I start looking at catalysts and other things and economic situations and all that stuff. It's another world. I really rather not. If I can put on maybe 10 contracts and see how it goes for the rest of this month, let's see, go long, go short. Even 10 contracts will get you nicely into what, $50,000 if you have a good trade. I mean, from up on this chart right here, from up here, you buy 10 puts, man. You're in this thing. It's not a big deal. You're buying it at $1. It's probably $10 down here. That's plenty. That's massive.
Doesn't somebody in our group do swing trading? I can't remember.
I think quite a few guys who love Preet talks about it a fair bit, but we have a swing trading channel here.
Mark is doing good on a swing actually. He's not doing with the options, but he's doing with the equity, and he has put up gains.
It's been going well.
I do that with the equities only. I do with equities, but very, very few. Just like buying, Intel recently or K-Web, which was the Chinese one. But very few swing trades. I mean, but on equities, not options. It's very, very hard. What Avi, I think, is looking. Avi, what you are looking at is, buying options, right? Straight out.
Yeah.
And
Options about 1 month out. So you don't deal with time decay because the typical hold time for these will be 2 or 3 days.
Yeah, exactly.
When you want to stay away from the from the expiry. So look at something like this on the 1st of August. I see this massive bullish engulfing candle right here. The entry would be here. Let's say by the 620 calls. So you're already in the money. And then you're going up. Where would I see selling? I'd see it up here. Let's say 628 is where I take it off. Let's see how it goes.
Yeah.
Buying that, and it gapped up on that day. Next day, there you go. Hit the target on the very next day, near the open. That's it. You're buying it here. You're out here, or out 90% of it. The next area of resistance I'd identified up here around 633. And there you go. Is it going? No, close. Didn't quite get there. But you're still in it. I mean, your entry's way down here. You're in this thing. And then unless I see a massive reversal pattern, then I'll take a position the other way. So far, I don't see anything reversing. It's still just in this uptrend. It pulled down a bit. I don't see a reversal setup.
Yeah. I mean, you can even
up there. Here on this day.
You can do it with equities as well, Avi. I mean, you can buy a bunch of shares and.
Yeah, but I mean, I don't want to.
Without losing the time decay. You got the finances for it, so.
Yeah, you go buy $4 or $5 million worth of this. There's other things I could do with that kind of cash and put at risk.
That's another thing, yeah.
I stopped with the options because I was just getting wrong timing every time, man. I was just going like 2 weeks out. My move would happen maybe like the day after I literally had expired, or like Monday or something.
Yeah.
I don't know. So I stopped just messing with trying to swing those, and I started focusing on the stocks because I can hold on to them a little longer.
They're tricky with options. You need it to work. You need to have at least 1 month of time on your side to expiry, and you need it to work within 2 days of your entry. Otherwise, you basically should get out at break even because time decay will just eat you up.
Yeah, just overnight. It's like down 10, 20%. And you're like, okay.
Yeah. So when you do get a good pop in it, you get out quick. So if you entered this reversal pattern right down here on this day, on the next day you're at the open, this would have worked beautifully. You're out 95% of it. Then whatever's left is not going to hurt you. And if you see it really dropping, and on this drop, the option's likely to be at your break even if it's got bad time decay. Then you get out, no big deal.
Yeah.
Then on the next day, well, you have a gap up. I don't see any patterns over here for a reversal, long or short. Nothing. I wouldn't touch it, I think. And let's see on this next day. Here we go. This is interesting. Look at this massive reversal setup right there. Set the open, take the short. You buy, let's say 637 puts. Your target's down here. Previous day's intraday level. Actually, this would be done within the day even. 632, you're out of there. You're at 95%. That's perfect. You don't have to deal with time decay. And let's see, then what? Then you have down here, nothing, just consolidation popped up. What do we have? Oh, here's this hammer. This makes it interesting for a long continued move up. So I would close the position right at the open, close the puts, and open calls probably. Yeah, there you go, right at the open. Close the puts, open the calls, pre-market breakout, open the calls, 633s. Your target's up here, 637 and 638. And this would have happened within the day, 637. Look at that. Not too difficult. You don't put on such a massive size, and because you don't have stops. If overnight you put them on, you got to realize whatever cash you're putting into buy it, that's your risk.
That is a risk, yeah. Yeah,
So
exactly.
that's why I wouldn't buy 1,000 contracts. Buy maybe 10 and just leave it. That's why. Yeah, Tarek, go ahead.
For swinging options, two things that I found useful. I'm more of a seller, option seller. Like I'll sell puts, I'll sell calls, I'll go 45 days out, as you mentioned, Avi. That works out fine. I'm still having these. And another thing also that if I want to buy, I look at the calculated move.
Mm-hmm.
Because if I'm going if I'm not sure which dates to buy. So let's say I'm looking at the SPY, I want to buy the 630 and I'm expecting it to go to 634. I'll go look at the expected move and I make sure at least that it have 1.5 times the expected move.
Mm-hmm.
So by that, it's giving me more odds to make sure that I will land in the money at some point.
Mm-hmm. Yeah, no, I like that. The expected move makes sense and selling makes sense. I've done a lot of option selling as far as swing trading is concerned. The only problem I have with selling is it's not as capital efficient as going long. I'm going pure directional. So I'm counting on massive reversal setups or continuation setups. That's the only thing. So I want to be able to make $10 by putting $1 down. When you're selling options, it's almost the reverse. You get a very high win rate for sure. But for $10 you put down, you make $1. And if that's the case, I'd just rather day trade and make 6 figures every day. Might as well just do that. So yeah, there's advantages to that too. And the expected move, again, I've never really looked at the calculation. It seems to make sense. A lot of people use it. It looks like it's something consistent, but not something I've really explored. So anyways, all good. There's things here. All right, that's an hour here. I'll end this recording at least. Where is it? Cool.
So have you done